All right, so what if I told you there's a trading strategy out there that's supposed to be simple, repeatable, and works almost every single day? Well, there's one making the rounds online that promises just that. So today, we're going to dive in and break this thing down, piece by piece, to see what's really under the hood.
Okay, that's a pretty bold statement, right? The creator is basically saying they've taken all the confusing stuff, all the guesswork that makes most people lose money, and just gotten rid of it. So simple, a beginner can't mess it up. We'll see about that.
And to prove their point, boom, $10,000. That's the profit they say they pulled from a single trade using this exact method. Look, a number like that, it gets your attention. So let's dig in and figure out how this is all supposed to work.
So, here's how we're going to break it all down. First, we'll look at the stupid simple promise itself. Then, we'll get into the nitty-gritty of the four-step blueprint. After that, we'll see how a trade actually plays out, put the whole thing to the test, and finally, look at the results. And, the catch.
Okay, first up, the big promise. What's the actual goal here? Well, at its core, this whole thing is supposed to fix a problem that I think we've all felt. That feeling of just staring at the charts, overthinking everything, and getting totally paralyzed.
The whole idea is to stop trading on gut feelings and start following a clear, data-driven process. You're just following a set of rules. That's it. The claim is that this lets you make smart decisions based on what the market is actually doing, not what you feel like it's doing. And you only have to do it for a couple of hours each morning.
All right, so let's get into the mechanics. This is the real meat of the strategy. It's a methodical four-step process that's supposed to help you find and jump on those high-probability trades. So you've got 4 steps: the setup, the trend, the signal, and the entry. Pretty straightforward, right? Each one logically follows the next, building a complete picture. Let's go through them one by one.
First things first, the timing. This strategy is only used between 8 a.m. and 9:30 a.m. New York time. Why then? Well, it's that little sweet spot right before the stock market opens. You start to get some good movement, some volatility, but you're not getting thrown around by that insane chaos that happens right at the 9:30 bell.
Okay, step 2 is all about the trend. You're going to pull up a low time frame chart, something like a 1-minute or 5-minute, and just map out what's happening. You draw your trend lines, connecting the recent swing highs and lows. It's all about getting a visual on which way the market is heading and where the key levels are.
All right, now we're at step 3, the signal. And listen up, because this is the most important part. You're not just looking for one thing to happen. You need 2 specific events to occur pretty close together. This little combo is what tells you, okay, it's go time.
So, the first part of that signal is called a change of character. What is that? Well, in simple terms, it's when you see a big, decisive candle break and close past a recent low. It's like the market is tapping you on the shoulder and saying, hey, you know that uptrend we were in? It might be over.
The second piece of the puzzle is something called a fair value gap, or FVG. This is a special 3-candle pattern. See how the wicks of the first and third candles don't touch? That creates an imbalance. It's like the market moves so fast it left a little void. And what does the market love to do? It loves to go back and fill those voids. And that is exactly where we're aiming.
And that brings us to the final step, getting into the trade. So, once you see that change of character and you see that fair value gap, you're ready. You place your order right at the halfway point, the 50% mark of that gap. Then you tuck your stop loss just above or below the pattern. Super clear entry, super clear risk. Okay, so you're in, the trade is live. Now what happens? Well, managing the trade is just as methodical as finding it in the first place.
So as soon as the price starts moving your way, the number one job is to get your risk off the table. You move that stop loss up to break even. No risk trade now. Then, once you hit a 2-to-1 profit target, you take half your profits, lock it in. The rest, you let it run, trailing your stop loss behind to see if you can catch a bigger move.
And get this, in the example trade they showed, this exact management plan led to a profit that was 4.5 times the initial risk, 4.5 R. And the whole thing, from start to finish, it took just 23 minutes. Not bad.
All right, but look, one amazing trade is great for a highlight reel, but does it work consistently? To answer that, the creator actually went back and tested this thing.
So what they did was they went back over the last 2 weeks of charts, and every single time the rules for a trade were met in that specific time window, they logged it. The goal was to see what would have happened if you had just followed the system blindly.
Which brings us to the moment of truth. the results. Let's look at how it actually performed over that 2-week test. And maybe more importantly, let's talk about the fine print.
So after 2 weeks of backtesting, the reported total profit came out to $6,600.
Now, here's the really important part. How did they get to that number? Well, that result comes from risking $1,000 on every single trade, which, is a lot for most people. If you scale that down to a more realistic risk, say $100 a trade, that 2-week profit would be $660. So context here is everything. And finally, we get to the catch. The creator is pretty upfront about a few things. Yeah, you're going to have losing trades, and some will just be break even. And hey, some days you won't get a setup at all. But then they mention that this is just a simplified version of their full model, and that the really advanced stuff, well, that's taught to their private students.
And that kind of leaves you with a big question, doesn't it? If the stupid, simple version can supposedly get these kinds of results, then what's the point of all the more complex stuff they teach behind a paywall? It really makes you wonder about that line between a simple, effective strategy and what might be left out to create a sales pitch.